Hello everybody, it's Nick McDonald speaking. Thank you for watching this week's ICE commentary video on the dollar index and currency markets. Starting here with the daily chart. So we had some uncertainty last week in terms of was this uptrending, downtrending, and how did this compare across the time frames. And we've still got that uncertainty. We've obviously declined here. We've broken down to a lower low on the daily chart. So this is the first indication of what was looking like a daily chart uptrend has now, even though it's not changed to downtrend, has got more bearish because we've broken down and we're making a lower low than the previous low, which I had marked in there. So we've broken down through here now, and this does look bearish. It's early days, and it's early days to say if we've made a lower high, but certainly we've come down and we've come up and we've been trying to break up through 80. So 80 was obviously our key level. We came down right below 80, only held there for one day, and for 5 days here we've tried to break up above 80 and really failed to, while even at the same time here, and especially on Friday, just breaking down below this previous low. So if we came and actually put our cursor there, you can see that this low of this day was held for a day here, and we rallied back up, failed at 80, and then came down and actually have broken that. So starting to show the first signs of bearishness. Then when we look at it on a weekly chart, we had this weekly chart uptrend which was strong and a concern, but even here we've now got the first signs of a weekly chart downtrend, because we identified this last week that potentially this could be a lower high if we broke down through the low, and we've broken down and we've held down there, and now this looks like a lower high. To confirm the weekly chart downtrend, we have to break down through this previous low. So the low there is at it's about 78.50, so we have to break down through 78.50 to confirm the downtrend. But it's looking quite probable based on this chart, and it's also looking likely based on the daily chart. And based on that, we've got this resistance up above at 80, which is just becoming more and more of a key level. You can see how many weeks here it's held the high: 1, 2, 3, 4, and now for the 5th week. And it is certainly very significant resistance. And if we go back, we can see many more highs and lows forming around that 80 level. So 80 is key. It's looking bearish. It's not a confirmed downtrend yet, but any breakdown through 78.50 will be looking that way. Come in and have a look at the monthly chart and see if this helps us. Certainly, remember, it started to look quite bullish in the month last week when we were up above these highs here, and the monthly candle was looking bullish and quite green. Even though this candle is still green, i.e. still above where it opened, it has now come much higher this month and come right back down and almost rejected. If this did happen to close a little bit lower and get down around that 78.50 type region, which is actually the low of last month, this would be looking very, very bearish and really setting us up for that bigger, longer term move down towards 74. So I do think this is looking bearish right now, and it has been longer term bearish for a long time. Just intra-month part of that candle was starting to look bullish earlier in the month, but now even the candle on the monthly chart is starting to look bearish as well. This is looking like the dollar index going lower. So bearish on the monthly, somewhat bearish on the weekly, but we need to see a breakdown through that low. And again, somewhat bearish on the daily. The first signs of a change trend here having broken down through this low. We need to see lower highs forming, but any breakdown a little bit further, 78.50 being the key level and marking it on the daily chart is over here. Any breakdown through those lows. By that point, we should have also put in lower highs and lower lows on the daily chart, and we would then have a daily and a weekly and a monthly chart all in downtrend. 78.50 therefore becoming the key level. There is trading opportunities on the way, but just bear in mind that 7900 is in the way, and that too is likely to provide a little bit of a bounce, but equally could provide resistance if we broke below it and then pull back into it, much like 78 has done this week. Just quickly looking at how this translates to a couple of the other markets. Come in and looking, the cash markets, looking at euro dollar here. Well, what euro dollar has done is actually come down. If we come and look at this on a weekly chart, it shows it best. It's really come up and it tested 1.35, which is resistance, came back and really held 1.3 well. It's done this a number of times in the past. We've got this bullish candle now, we've broken up through it, and at the very least it's looking like coming up and testing 135 again, maybe going beyond. But that is showing euro strength and therefore dollar weakness and backing up our view. And if we just come and look at dollar yen, this is another reason why we showed why this was actually keeping the dollar index propped up, because dollar yen was so strong. Well, dollar yen is showing first signs of a pullback by having a pullback on the daily chart back into the averages here, but actually now looking like a bigger pullback is due on the weekly, and any breakdown through last week's low is going to be looking for the dollar yen to decline at least back into its moving averages here, probably back into support around about 80. So therefore quite a reasonable fall on the cards for dollar yen too, also supporting the view of dollar index down. So coming back to dollar index, this does look bearish, but it is early days in terms of the trend agreement. We haven't quite got it across all the time frames yet. The weekly is in the early stages of being bearish. Daily chart showing the first signs of bearishness by breaking that low. Monthly chart has been in a downtrend for a long time. 79 in the very short term is key. 78.50, not so much that 78.50 is a key level in terms of support or resistance, but it's a key level in terms of confirming the downtrend across multiple time frames. When and if we break that, we'll be looking very bearish. I'm certainly swaying to the downside here. I do think we'll go lower. If we come higher, we're likely to find resistance at 80, and if we came higher again, then we've got 81 to compete with. I don't expect that to happen this week. Of course, anything can happen. If we did break up through 80, then 80 would be support as long as price was above it. As it happens, we're below it. I expect 80 to act as resistance, 79 to provide only minor support, and my expectation is we will get down towards 78.50. It will be broken, and we will come back into trend agreement. Obviously, we'll assess that more as and if that happens, but that is how it is looking right now. And dollar index looking bearish, and the currencies, the major currencies that make up the dollar index, also supporting that view. Hope that helps everybody. Have a fantastic week's trading this week. I'll speak to you on the next update.